Hello, everyone. Welcome to the News Browse News broadcast. The price of Brent crude oil has surged past $125 a barrel, with global stock markets retreating as U.S.-Iran talks remain stalled, raising significant doubts about a swift end to the Iran war and the reopening of the crucial Strait of Hormuz. This is according to the Canadian press. Brent crude for June delivery jumped 6.2% to $125.36, while benchmark U.S. crude climbed to $109.38 per barrel. The 9-week-long conflict, coupled with reports of potential escalation by U.S. President Donald Trump, has pushed oil prices significantly higher from around $70 per barrel before the war. The U.S. dollar has strengthened, reaching a nearly 2-year high against the Japanese yen as investors seek safe havens. Asian markets saw declines, with Tokyo's Nikkei 225 down 1.6% and South Korea's Kospi falling 1.1%, though some individual stocks like Starbucks and Visa posted gains following strong results. According to a report by the Liberty Times, a recently cited U.S. State Department telegram reveals that the United States is working to establish a new international alliance aimed at ensuring safe passage through the Strait of Hormuz. U.S. Secretary of State Rubio approved the Maritime Freedom Framework, MFC, on April 28, which is a joint initiative of the State Department and the Pentagon. This framework is considered a crucial step towards building a post-Middle East conflict maritime security architecture. Its objectives include guaranteeing long-term energy security, safeguarding vital maritime infrastructure, and upholding navigational rights and freedoms in the critical waterway. U.S. diplomatic missions were instructed to convey this proposal to partner nations, explicitly excluding Russia, China, Belarus, Cuba, and other U.S. adversaries. Participation can range from diplomatic engagement and information sharing to sanctions enforcement and naval presence. According to NHK, the Chinese government announced on April 27 its decision to prohibit U.S. company Meta from acquiring Manus, an AI enterprise originating from China, and has demanded that Meta withdraw the acquisition deal. Meta, formerly Facebook, had announced its plan to acquire Manus last December for approximately $2 billion. China's National Development and Reform Commission explicitly stated its prohibition on the foreign investment project. Manus specializes in developing and providing AI agents that allow AI to autonomously perform multiple tasks. This move by Beijing is analyzed as a strategic decision driven by concerns that critical AI-related technology could fall into American hands, intensifying the existing technological rivalry between the two global powers in advanced fields. China considers AI development a national strategy, aiming to integrate AI with various industries as outlined in its 2026-2030 5-year plan. Yonhap News Agency reports that Samsung Electronics Co.'s achieved a remarkable financial performance in the first quarter, with its net profit surging more than fivefold year-on-year to 47.22 trillion won, $31.8 billion. Operating profit also saw an impressive increase, jumping over eightfold to 57.23 trillion won, while sales climbed 69.2% to 133.87 trillion won. This record quarterly performance was primarily fueled by robust demand for high-end memory chips, crucial for artificial intelligence, AI, applications, and a general rise in memory prices within its Device Solutions division. A weaker Korean won against the U.S. dollar further boosted operating profit by 1.8 trillion won. Looking ahead, Samsung Electronics anticipates continued solid performance into the second quarter, expecting sustained heavy investment in AI infrastructure by global technology firms to bolster memory chip prices. The company has already begun production of 6th-generation high-bandwidth memory, HBM4, and expects HBM sales to more than triple this year, with capacity fully booked. However, the company faces a potential general strike from its unionized workers demanding a share of operating profit, which could disrupt chip production, although the impact might be limited due to high automation. China's Non-Manufacturing Purchasing Managers Index, PMI, dropped to 49.4 in April, a decline of 0.7 percentage points from the previous month, according to official data reported by People's Daily Online. This figure, below the 50-point threshold, signals a contraction in non-manufacturing activity. The sub-index for business activity in the service sector also fell to 49.6, down 0.6 percentage points from March. While some sectors like wholesale, retail, and resident services experienced subdued market activity, others such as railway transport, postal services, and telecom saw rapid expansion. The service sector's Business Expectation Index, however, improved to 55.4, suggesting a stronger positive outlook. Meanwhile, the construction sector's business activity sub-index decreased by 1.3 percentage points to 48. China's manufacturing PMI registered 50.3, a slight decrease of 0.1 percentage points, still indicating expansion. The composite PMI output index also slipped to 50.1. That's all for this video. Thank you for watching. See you in the next video.